Well, top of the morning to you. It is Tuesday, February 18th. This is our Tuesday key market drivers call. Try to get you up to date on what's going on here, what's pushing prices and markets around right now. Here's our contact info. We would love to hear from you, so let's get after it. I think when you look at the markets and you try to answer the question, what are the bigger things pushing markets around right now? Paige is going to talk to us, as always, about the weather, but I think the market is beginning to kind of focus in on those two middle bullet points there. I think it's crunch time in South America. The situation, we talked about it this morning as a group, is it getting better? Well, it's clearly getting better in Brazil. I think the bigger question that Paige is going to kind of try to take apart is it getting worse in Argentina? I mean, you can look at the weather maps, you can look at the rain. Are we holding serve? Are we getting worse? Are we getting better? And I think that's what the market really, Paige will talk about that today, but I think that's what the market honestly is trying to handicap right now. We still have this tariff threat hanging over our head. We still don't have any official resolution, if you will, to the tariffs with our North American trading partners, Canada and Mexico. But we'll talk a little bit more about the reciprocal tariffs that Trump is now starting to talk about. We'll talk maybe a little bit, there's maybe a little bit more information. I might be squinting to see what I want to see. Might be a little bit more information on the North American tariff likelihood, but I'll talk about that as well. And we'll talk about this week's, or I guess last week's, PPI and CPI data and what that told us about markets. So, but let's talk about the tariffs before I get to the reciprocal tariffs. And again, this is maybe the part that I'm squinting to see through the tariff smoke to see, hopefully, maybe what I want to see. Maybe there's some confirmation bias in there for me. I will admit that ahead of time, but I did see an interview. It was actually a PBS interview with Lighthizer, the U.S. trade representative, about the Trump tariffs. About specifically, he talked about all of this. Yeah,
Dave. To be clear, he's not USTR now.
He was right. He was right.
Yeah. Okay. Go ahead. I'm sorry.
No, that's all right. I should have been clear about that, but. He was opining about what he thought Trump was trying to do, and he didn't actually say it, but you couldn't watch the first part of the interview without coming away with the notion of maybe feeling better about not having tariffs with our North American trading partners. He felt like that one was clearly a threat to get some help with border security, which he contrasted then with the blanket tariffs that have gone on China, and then contrasted that again with this third category, and that is this reciprocal tariffs thing. I didn't hear it in that particular interview, but I read it in another wire that I read. I guess I didn't realize this, but this was in the context of reciprocal tariffs. The U.S. or U.S. importers that ends up getting passed through to U.S. consumers pays about $800 billion every year in tariffs that other countries place on stuff that they send to us. We only raise about $70 billion of tariffs on stuff, on their goods that come in here. So they're collecting $800 billion on our stuff. We're only getting 70. Now I realize that's a lot of other countries compared to just one, but I think that is the point of what you heard last week from this administration on reciprocal tariffs. The level playing field argument out there. One of the things that Lighthizer said, I actually had it in a quote in today's wire, that I thought was one of those things that just stuck out to me. He said, and I'm going to probably mess this up. He said the problem with free trade is not that it doesn't work. The problem with free trade is that it doesn't exist. And I think that's a direct quote out of that interview. And I thought that was interesting. And I think that is what this administration is trying to address with that. What does that mean to ag products? Well, I think the level playing field ultimately is good for farmers. The problem is we export a lot of stuff out of this country. And if you have a tariff on something else that causes one of those trading partners that buys our corn, buys our soybeans, I mean, China soybeans and Mexico corn. Mexico's our biggest customer for corn. China's our biggest customer for exported beans. If we hit them with tariffs on something else that causes a reciprocal tariff from them to us, that can damage farm prices, as we saw back in 2018. So I think that's why farmers generally don't like to hear the T word. But we'll see where all this goes. I think Bill continues to point out to us that there was a lot of threats also made in Trump 1.0. And what ended up happening out of that was maybe a little bit better trade deals in a lot of areas and a lot more targeted tariffs instead of blanket tariffs. So we will see if that holds. I'm going to skip the South American bullet here. I'm going to leave that to Paige, but we're doing a lot. One of the things you're going to see here with the bean harvest and corn planting charts that we're going to show you is we're catching up. We're not caught up yet, but we are catching up. Brazilian farmers are certainly catching up. One of the other things that we talked about, didn't put it on the deck this week, but thought it was worth mentioning. A lot of chatter last week from the new administration on a change of approach to high path. Don't have all the details on that yet, but from what we are reading and what we are seeing and hearing in the trade is that might be less of a, we've had a pretty aggressive, the USDA has had a pretty aggressive cull strategy. You find an infected house, you take all the birds out of that, and then some radius around that for other houses. We don't know what other countries do yet. We're trying to investigate that. We don't know if this new strategy is going to work better. I think the context at this point, and we'll report back as we find out more. But in the context of this, I think it's a different approach. Clearly what we're doing now doesn't seem to be working very good. All you have to do is walk past the egg section in your grocery store to tell that. So we're going to try something different. Will it work? I think the jury is going to be still out on that. But again, we'll report back as we know more. We are going to very briefly show you last week's February WASDE slide. Didn't learn anything, so I'm not going to spend much time on it. We've got a NOPA crush report coming out a little bit later this morning. We'll have some more information that we'll feed to you when that comes out. But I want everybody to mark their calendars. That third bullet point, that planning intentions and March 1 stocks report, it's one of the bigger reports we get every year from the USDA. So maybe a little bit early to start talking about it, but I will start talking about acreage splits here when I get to the corn and soy complex slides. So maybe it ain't too early. So Paige is going to talk about the weather, but I found this chart pretty interesting. This is a Karen Braun chart that she tweeted. Actually, the data source is LSEG Ag, the weather forecasters there. And you can see the February is a very important month for Argentine grain development. You can see where we kind of stack up here. And this is kind of the, it's not great, but it's also not as bad as that disaster. That 2023 crop was the disaster. That was the half a crop. So we've got more rain than the disaster year, but we're certainly not getting as much rain as we need in Argentina. So here's the WASDE. Okay, we're going to go past that. No, I will tell you what the WASDE said. If you look at corn and soybeans, really the whole soy complex, beans, meal, and oil, and corn, the USDA photocopied the prior month, the January WASDE, and lived to fight another day. They made a massive, tongue-in-cheek, 4 million bushel change in wheat. Want to waste any time explaining the 4 million bushels, Scott?
No, it's not worth it.
Yeah, so they did adjust.
Not worth the air.
Yeah, if you did it, they did adjust South American crops, but again, that was largely expected. With the rain in the lack of rain in Argentina, the USDA, like everybody else, is revising those crop sizes lower. So CPI, PPI, what you're looking at here is the food part of that. Food inflation is kind of rearing its ugly head a little bit again, not like it was here a year or so two ago, but certainly still hasn't tamped things down. Eggs are certainly a contributor to that. When you look at the total the overall, not just food, CPI and PPI. I think the message last week was inflation has been receding, but we're starting to maybe lose a little bit of ground. It's maybe the fire's not all the way put out. And I think what this means for us, what it means in the commodity business, is that we're probably going to see the Fed not reduce interest rates again anytime soon. That is at least supportive of the dollar, maybe a little bit bullish to friendly to bullish the value of the dollar. That should continue to keep pressure on commodity prices. Now, that said, we have backed off the value of the U.S. dollar index from circa 110 here 3 or 4 weeks ago to 106 and change. Maybe that move to 110 was too aggressive. But I think that the general message here is I think the value of the dollar probably holds, at the very least, holds steady, might go up a little bit more. And again, that could continue to pressure commodity prices. Corn continues to hang out kind of at the top of this range that it's been in, kind of this $4.50 to $5 range. Doesn't seem to have quite enough bullish news yet to go above that. What's hanging over its head? Well, Paige going to talk about South American weather, Brazil and Argentina. I think one of the other things that the market is starting to talk about, and this goes into is it too early to talk about planted area? Corn bean ratio. Now, that is a very generic, high-level indicator of what is more lucrative for a farmer to grow. The specific farm economics in individual states can vary significantly, but just as a top-level thing to look at, corn bean ratio, you take the price of new crop beans, November soybeans, divided by December corn futures. That's 2.22 and falling. What does that mean in English? Well, generally speaking, 2.25 to 2.5 is kind of that normal range. You start getting below 2.25, which we are barely below it right now. That starts to favor maybe planting a few more corn acres. Obviously, we're 2.5 and above. The opposite, you're starting to favor a few more bean acres. And I think I get to talk to Bill more to understand the detail of this, but when you look at this normal rotational approach that farmers in the Midwest take, you have years where, you kind of go back and forth, a little bit more beans, a little bit more corn year to year as you go through it. Well, this is a year that you would expect things maybe to tip back a little bit more in the direction of corn anyway. Are we going to see a big move to corn planting? That's getting a lot of chatter, and I think that probably also maybe keeps a little bit of a lid on the bean market, but the South American weather, especially Argentina, and a good export pace, as you can see there from that second bullet. Those are the things that are kind of keeping a floor under corn prices as well. So do we go out $5 and above? No, that's probably going to be largely determined by what Paige tells us. Do we fall back down to the lower end of that range? Well, weather gets better in South America. I think that fourth bullet there that you see at the top could be that thing that starts pressuring prices down. But we got a lot of water to go over the dam, as they say. Here's just safrinha corn planting. We are catching up. Remember, 2 or 3 weeks ago, we were telling you, oh my God, this is the slowest since 2021 crop. Well, we are catching up, not quite back to the 5-year average yet, but certainly heading that direction. So, all right, enough about that. Scott, what's going on in the wheat side of things?
I figured you might just flip past this slide like you did the WASDE slide. But
why is that? I mean, it's going up.
Yeah, it is. It is. Now, this is the last couple of weeks in a row here of moving higher. If you're looking just at the price action, whether it's Chicago or Kansas City, certainly Minneapolis is kind of playing catch up. But those big two markets anyway are both decidedly above midway point of the recent range, going all the way back to October. There's a few things to that, but I would say one of the biggest influences on this market continues to be what is going on in other places. In the corn market now, hanging just below $5. We're sitting at $4.99 on March corn this morning, and it is February, and we're going to talk about winter wheat conditions. We've got this horrible Arctic cold blowing through right now. Anything that doesn't have snow cover on it is susceptible. But again, it's not. I tend to not worry too much about it in February. You got to see what happens in the spring, and so it just leaves me with not a lot of things to put my finger on. When you look at it, things in the world, directionally, things are still kind of going in the same direction they were. Russia is still having their prices go higher. They're now up into the mid 240s. Argentina and Ukraine are the low FOB marks in the world. France's winter conditions came out, and they were crying about how poor they were, and they're at 73%. Certainly above where they were a year ago, but below the average, and certainly below where they were last fall. And the last thing I would mention is that, you mentioned the WASD, and we really didn't talk about the WASD much at all. One of the things I would have bet on, I made a sizable bet, and I would have lost, is that both Argentina and Australia crops were left unchanged by the WASD. That was a little surprising to me, maybe not terribly surprising, but I thought there was enough.
Takes February off.
Well, yeah, but I would have thought that we've got enough information now. I mean, those crops have been harvested for a good while. We've got a lot of well-respected analysts that have come out and moved things a good bit higher. But here we are, and that'll just put more pressure on them, I believe, when we get to March and April. To move that number a little bit higher. So the things to watch out for going forward continue to be weather here in certainly in the States and the Northern Hemisphere. And, there's talk Trump's going to get Putin to the peace table, like, is it this week or next week in Saudi Arabia or something? So, I mean, we've been talking about it for a long time. Does it finally happen? And if it does happen, like everybody thinks that maybe it could, does it really have any impact on the market? That would be the other $64,000 question. So,
aren't we within a week or two of the third anniversary of the start of this war in the Ukraine?
Yeah,
27th is the number I have in my head.
I don't know, I had 22nd, but doesn't matter.
Somewhere in
February
there, right?
of 22 would be the
long damn time.
Yeah.
Well, I was wondering how much of this rally the last couple of weeks, a little bit of a rally in wheat prices, how much of this was the whole winter kill boogeyman that we seem to get scared of every year at about this time. So,
yeah.
All right. Well, thank you for that. Let me keep moving here to kind of keep us on pace. Soy complex up a little, down a little, depending on whether you're looking at beans, meal, or oil. But beans and meal down, that fits my market bias. Oil really didn't do much of anything last week. I think the way the oil market looks to me is kind of like the corn market. We're kind of at the top end of the range that we've been at, and we probably need a bit of bullish information to get us higher. Now, are we going to get it? Well, I think Paige is going to help us answer that question. I think from a renewable fuels policy standpoint, I don't think we're going to have really a whole lot new on that for quite a number of months here. So I think it's going to be hard in the short and medium term to keep us up here for a policy reason, but you never know when you're talking about government what could happen. One of the other things I'll show you when I get to the veg oil slide is that we had a pretty good bounce higher last week in Argentine soybean oil prices. So it's a bit counter-seasonal for stuff down there to be going up as they get close to harvest. But they clearly have got good demand with, we've talked about how expensive palm oil is. I think it's a little, they've had a good run in Argentina selling oil. I think India's bought a lot more soy than they have palm here in recent months. So I think that's the one thing that I guess I see as a little bit of a threat, but would be a little surprised if we can continue to surge higher to that degree. The way we did last week, I'll show you that in a second. Here's your soybean harvest, very similar chart to the, not coincidentally, by the way, to the safrinha corn crop planting. Be interesting to see what Dr. Cordonnier says when we talk to him here this morning. But he made the comment last week that he thought here in a couple weeks we might be right back to that 5-year average on harvest progress and safrinha corn planting in central Brazil. So look at the first bullet here. The price line, you can see palm oil up a little bit last week, not a whole lot. But if you look at that first bullet, Argentine soybean oil prices rose over $60 last week. That's a big bounce. And you can see that we are closing the gap between the cheapest FOB soybean oil on the planet, that's Argentina, and Malaysian FOB palm oil prices. Now, palm oil is still a little expensive, but not nearly to the degree that it has been over recent months. So I thought we would close that gap with palm oil prices coming down. That has certainly happened up until the last 2 weeks, but I was not expecting Argentine soybean oil prices, honestly, to be this strong at this point in the year. So we will see. We will see where that goes. Malaysian Palm Oil Board got some data out actually yesterday, not from the Palm Oil Board, but we got the first half of February, Southern Millers. Production actually better. Now, why would production be better in February? Well, remember January, it's monsoon season over there. The monsoons will slow down harvest, fruit harvest, and I think we're just seeing a rebound in that as we see the rains back off just a little bit. I think a lot of analysts were forecasting February stocks to fall yet again. I think with this production and export data that you're looking at there in that third bullet, maybe not. Stabro told me this morning that they're looking for stocks to be flatter. He's actually forecasting things to be up 1%. So this thing here probably keeps it from falling apart. The government there is now talking about sometime next year. They're just trying to go up to 40% blend on biofuels. Now they're talking about the next step down the road, which is getting to be 50. I don't know. We've probably beat that horse to death, but we'll see. We'll see where that goes. Jay, what is going on at this point in the dairy market?
Not a lot going on in the dairy. Yeah, not a lot going on right now, Dave, in the dairy complex. We've got the milk production report that'll come out on Friday that I'm kind of focused in. And then the following week, we'll get cold storage and the products report on March 4th. So honestly, it's been relatively quiet. Milk production, depending on which part of the country you live in, is it going up? Is it going down? Is it stable? It reflects a lot what's going on with the weather. And we know it's cold here in the upper Midwest. Not any changes on the cheddar cheese side, and same thing on the butter. I hate to say it's kind of boring. It's kind of boring right now. I think the big key thing I'm going to be watching out for is the milk production report on Friday. You mentioned high path earlier. I'm really interested to see what the numbers are going to be on the West Coast, in particular for California. As we've talked about before, California has been impacted by high path in the last 2 reports. We want to get some sort of sense if California milk production has stabilized. It was trending lower. Numbers came out not as bad as what we anticipated last month. So we want to see if we've hit a bottom there and maybe stabilized and maybe even trended up a little bit. But that's just pure speculation on my part. But really, I'm just focused this week on looking at milk production report and the impacts on the West Coast and high path.
Well, I'll tell you what, after the last couple of years, using the words boring and butter in the same sentence is actually kind of nice.
Yes, very much so.
All right. Thank you for that, Jay. And as always, we have saved the best for last here. I wanted to look at these temperature slides right here just because they make me feel better. I think we're supposed to get here to 17 below tonight. How cold are you supposed to get tonight, Jay?
Oh, I think it's got a 2 in front of it, so it's going to be cold.
Have to. Yeah, we're supposed to be then. I think we're forecast at 54 degrees next Tuesday, which is a bit ridiculous, but probably doesn't mean much. So here's the Argentine and Brazil growing areas. Now I'm going to flip to the weather maps page. Go.
as Dave kind of mentioned earlier in the call, I have a little bit better news this week, especially when it comes to Brazil. Southern Brazil has been able to get some good rains over the past few weeks. If you remember, they were kind of hot and dry and in the same boat as Argentina. They've been able to get some good rains. But on the flip side of that coin, Central Brazil has not been getting good rains, which is exactly what we have been wanting. That has definitely helped out a lot in that soybean harvest and safrinha corn planting progress that Dave showed you those charts earlier. We're kind of right back where we need to be on that. So all of those heavy rains, we need to all say a rain prayer that they stay north, because those are some very, very heavy rains. But kind of staying out of those main growing regions, which is what we're looking for.
Kind of were they north and west?
Mm-hmm.
Mato Grosso is kind of right in here, so.
Mm-hmm. Yeah, so they're a little bit, I'm a little paranoid, so they're a little closer than I would like them to be, but it seems like they haven't caused too many issues at this point. Looks like on this past 7-day map, Argentina was able to get a little bit of rain. Honestly, we would love to see those blues and reds sit over Argentina for a little bit, help them out. So it's a little bit of a different story on Argentina. Kind of what I said last week. It could be worse, but it definitely could be better. They've been able to get a little bit of rains here and there, but Dr. Cordonier has reduced his corn and soybean estimates by 1 million metric tons on each of those crops. And I think that's just kind of a reflection of not getting enough rain. We're not to the point of saying the rains aren't going to help us anymore, but as we go throughout this season, we're kind of missing our window here a little bit. And if you want to pop forward to the forecasts.
Yeah, this is kind of crunch time in Argentina, isn't it?
Yeah. So looking at Brazil on the forecast, it looks good. Those heavier rains look like they're going to continue to stay north. And southern Brazil still looks like they're going to be able to get some good rains. But really, when you look at Argentina, you could argue that there's maybe some areas in the 7-day that look like they might get some rain. But we could really stand to use some widespread heavy rains in Argentina, because to Dave's point, we're kind of getting to crunch time here. So the 14-day looks a little bit better, but I think everyone who listens to this call every week is very well aware that those 14-day forecasts may not make it into the 7-day and may not actually come to fruition. So really needing to see more rains in Argentina. Yeah, but at this point, the rains that we are getting are helping a little bit. We're just kind of not making up enough ground as I think the market would like. So.
Yeah, we talked on our pre-call this morning about, when is that period where, rains don't help anymore. Here in the U.S., September 15th, I know it's a big growing area and it varies a little bit by where you're at, but it's kind of the middle of September. And I made the comment this morning, and I'll ask Dr. Cordonier on our call, but on the call this morning, our pre-call, I said probably March 15th. Well, oddly enough, that is exactly 6-month offset to the September 15th here. And the U.S. Corn Belt is very similar latitude to the growing areas here down in Argentina. So, yeah, we're probably coming down the last 3 or 4 weeks of moisture needs here. So there you go. Well, thank you for that. Thank everybody for participating, and to all you listening, there is our contact info. We would, as always, love to hear from you. And as always, be careful out there.